Good evening, everyone. This is Joe Henches with Beyond the Chart, and this is a market update for Wednesday, November 6th. Let me stop that for a moment, and we'll go back to the Dow Industrials is the first slide we always talk about. It was down almost 21 points today, and as you can see, it had sold off quite a bit during the early part of the day, and they came back and just slightly down. I mean, it tried to make a run for being positive, but I mean, we got this 20-day pulling up pretty strong. It stayed above the 10. It still just keeps pushing. Now, I mean, we could get another little slight push up here and then roll over. I don't know. It's real hard to tell. It wouldn't be surprising at all when we talk about this to get a pullback. And look at this. I mean, wave one, you get a pullback. You get a pullback. You're going to get these kind of pullbacks. It's just going to happen. It's just a matter of how far back is going to be, like a 38% retracement or 50% of the move, or what. It could easily be right back, 15,400 or down a little bit lower than that. So let's take a look at S&P 500. Very similar. Now, one thing I want to make a note of real quick here. When you look at the numbering scheme I've got, this is where I think we are in the wave count. And we're talking about a wave count that is counting back from the October low here, 1, 2, 3, 4, and we're in fifth wave. And so it's really a matter of how far and how strong does this fifth wave push. Now, we've got some estimates. I mean, this is, I've got some estimates that push it way up here, a lot higher, based on some Fibonacci projections. But right now, I think the main concern is just trying to make sure we understand, where we are in terms of what we might be facing on a short-term correction. I think that's what we're just kind of keeping our eyes out for right now. When you look at the Nasdaq, I mean, the Nasdaq has got a little bit of, divergence we talked about before. But, when you see divergence, doesn't mean that things are going to come crashing down. It just means it's potentially going to correct a little bit. And that could be nothing more. It could be nothing more than a sideways, like it's been doing. Basically, it's been going sideways since October 22nd. That's how this one looks. Again, staying above the 10-day exponential moving average. Let's take a look. Let's take a look at the financial ETF, ELF. Now we're starting to see some of these financial, this financial ETF closing below the 10-day, last 4 days, okay? It did that as it started to roll down and correct back here. Had a couple closes, 3 closes here, and then rallied back up and then rolled back over. The May-June was a little choppier on all indices. You start to see some closes. It's basically a change. It's telling you something's changing. I mean, we could get a pop back on the upside, but it's telling you that some kind of corrective action is underway here. So this is just another little alert that to be on the lookout for. I think that's about it. I wanted to touch on oil. Oil has really continued its sell-off. We talked about trying to get support at the top here. It didn't. It bounced back, and it's continued down. Now, I do think, when I look in here, I'm not sure why that's doing that. Okay. When you look in here, this is where the congestion is coming right in through here. So this is where I'm kind of expecting that we're going to get some support. Some kind of support from all the trading that was going on back in there. And so I wouldn't be surprised to see this thing start to get some buying coming in, and then we get a bounce back up out of here. And who knows? I mean, maybe this is all this does in terms of retracement. We'll just have to see. If it breaks through this congestion in terms of selling, continues down, then we could be heading for new lows on USO. Now, USO again mirrors what's happening with the futures contracts in oil. So the stock of the day, Tesla Motors. I wanted to talk about that real quick. Tesla is trading in the aftermarket. I think it may have closed there. 1 55 after earnings came out at the end of the after the market close. So down, I think it's down about 22 points. I can hardly write this thing. Down about 22 in the aftermarket. But this has had a heck of a run, as you guys all know. Let's take a look at one of the ways to get in is to look for a close above the 20-day and then a confirming close above the high of that 20-day. And then I look for my DI plus to be greater than DI minus, and ideally had a correction where you've had a little bit of a pivot, and so you're starting to get in. Well, this was a potential get-in point, okay, an entry point. Now, a stop that you can use if you're trading a stock or even with options, although it's a little bit tougher sometimes, it depends on how long you feel comfortable in trying to hold your options. You get a close below the 10-day, and you only exit if you then get a low close below the low of that day. Okay, did you get one here? No. So you just ride this, and you just ride it. Here's a close below the 10. Did you get a close below the low of that day? No. Same thing here. Same thing here. Look at this big down day. Now this would be gut-wrenching because you sit there close at, I don't know why I'm not getting a, it's not highlighting for some reason. Not sure what it is. Anyway, it's a big sell-off, and you'd be looking at this and going, okay, oh my gosh, but you didn't get a close below the low of that day. Matter of fact, it closed back up higher, above the 10-day moving average, and you would have stayed in. And you wouldn't have had an exit until all the way over here where you had this low below the 10, and you got a close below the low of that day at 173.31. Now, that's just one way to manage a stop with a position, especially like with stocks. You could definitely, if you're in options, you might, you're going to be trading on a shorter time frame. You're going to want to tighten up your stops, and you can always look to get back in on re-entry type of techniques. But I thought this was kind of interesting, given, especially we thought we'd take a look at this since they don't really trade this on a regular basis, but given the news for today. So that's really about it for tonight. Let me just, tomorrow we've got the leading economic indicators at 9 o'clock Central Time, the ECB in Europe on Thursday, third quarter GDP on Thursday, payrolls on Friday morning. And just want to mention, ask you guys, if you're watching this on YouTube, stop by the website, check out the ebook, and if you're coming to my website, check out the ebook. Give me your thoughts. I'd really like to know what you think. And I'm always looking for ideas and things to improve the website. So, give me your thoughts, give me your comments. Have a great day. Talk to you soon.